Hey everybody, we're live for Tuesday's Cowboy Metal live stream. We broadcast from the great state of Texas and take no BS. And I have a special guest here today on the live stream. We don't do this often, but Ian and I had this really good conversation about what's going on with the dollar and thought we would bring it to you guys. So Ian, how are you doing today?
I'm really good, Rob. Thank you.
Well, thank you so much for joining. You and I had this really lively discussion today, and it's something that I also had with a lot of friends this weekend. And it's the idea that whether the dollar should crash now, whether the dollar is going to crash later. And for those of you just joining the stream, we do have super chats open. If you want to ask myself or Ian a question, please do that, and we'll pay attention to that. I'll make sure that we get that done for you. And make sure I get my sound check. Sound is good. And we do have a poll up. Please, guys, vote in the poll as well. Okay. Now, to go back to our conversation this morning, Ian, in conversations I've been having recently, there seems to be a thought out there. I don't want to call it like a faction of people, but just like a group of people who are like, we should just crash it now because it's going to get worse. If we're kicking the can down the road, it's better to take our pain and our medicine now. And I certainly understand that viewpoint, especially for people like who follow my channel or other related channels that are in gold and silver. And of course, you're in gold and silver, you're prepared. And at this point in time, it makes more sense for you because you're living in that world. And that's the world that your friends are in. And so sometimes I think we forget, what the consequences could be when we're talking about these things. And I think if we crash the dollar right now, it would lead to so much financial problems for people. People would have problem, buying food and living, and it would be one of these kind of end of the world situations. And I've never really, even though I've considered that as a possibility, I've never really embraced that because I don't think anybody really wants that. And I think there's a lot going on out there, not only in the public sphere, but in the private sphere around providing solutions. And I would like, us to have some time to provide solutions, but I wanted to get your thoughts on that. I thought you had some really good ones. What's your view on what's going on with the dollar? And do we need to go straight to a digital currency, or are we going to have another version of the paper dollar? Or how do you think that this is going to play out?
Wow, what a lot of points there, Rob. So yeah, I think our conversation started this morning. We don't have to go full central bank digital currency for control to move upwards to the Federal Reserve and the Federal Reserve's owners. And we talked a bit about who are the Federal Reserve's owners. It's all about control, power, and an increase in wealth. So I guess when I say they, or I say the financial elites, I'm talking about the people who control JP Morgan, the people who are the shareholders of the Federal Reserve. So they're not ready to relinquish. It's been a good ride for them all the way from 1913, the pretty well secret creation of the Federal Reserve. Some people have created fortunes of billions, if not trillions. I don't think they're ready to relinquish that. So if they can keep the dollar going in some form, they will. And I think I also spoke earlier, didn't I, to you about, imagine you're playing chess. Well, a lot of us know the rules of chess. We know how many squares that are on the board. We know how many players there are. We know the rules. Well, they play by different rules. They play by different timescales. So I don't think we've really got a hope in actually working out all the little maneuvers and the machinations of what they're doing. But we do, but if we understand the big picture, we can position accordingly and financially position ourselves accordingly. So I mean, 2-3 years ago, yeah, I would say absolutely the dollar's dying. There's going to be a new world reserve currency, but there is no sign of it. There is nothing that comes close in size to the dollar. I mean, if you look at the size of transactions, over 40% of worldwide trade is done in the dollar. Over 6% is done in the UK pound, over 3% done in the Australian dollar, on and on and on. China, the yuan, does 2.4% of world transactions are done in the yuan. The yuan is not open enough and deep enough, not at least at what is accessible worldwide. I mean, there's plenty of yuan in China, but it's stuck in China. And every time China has opened up and relaxed the situation, billions of dollars flee China, because I think the Chinese know instinctively, like we know, that their government is debasing their currency and they want to get out into real things. And then we've got the situation where all fiat currencies are falling against real things, against tangible assets, but the dollar is falling slower. And somebody made a good comment, and I don't agree with it, but it's worth pondering on, that one of the definitions of money, it has to be a store of value. And I can't remember who it was, but they said, well, that definition doesn't say how long it has to store value. So if the dollar stores value for you to do your trade, sell your goods, sell your services, and then buy the next lot of things you need, and it's not losing value as fast as the other currencies, surely other currencies and other nations and people groups are going to be looking for dollars, not thinking to hold them permanently, but for now, that's what we trade with fiat currencies. I mean, yes, you can trade with gold and silver. You can theoretically trade with crypto. You can trade with cows and sheep and pigs and corn and eggs, but the bulk of trade is done with fiat currencies. So look at what's happening to the pound. 19% food inflation. So the pound is losing, according to the government statistics, 1/5 of its value every year compounding. And that's what the government admits to. So, I mean, maybe if you've got pounds and you've got the choice of holding dollars, you'd hold some dollars instead of pounds. So I think the dollar is a long way from dead. We would love it to die, and we would love to go to sound money. I would love, but I don't think it's happening yet. I think we're a ways off it. It doesn't mean that gold and silver are not going to go up in purchasing power, and they still maintain that absolute privacy once you've purchased them. But I don't think the reason for them going up is going to be the death of the dollar or a petro yuan or a BRICS currency.
Yeah, that's a really good point that you bring up. You know, there is this thought that the dollar is going to be the last of the standing fiat currencies, and I think that's probably true. I know Brent Johnson's talked a lot about this. There's certainly people think that there's a dollar dominance theory, and I think that's probably true because right now, as you stated, we are in de-dollarization. We are in alternative trade agreements, but people still need it. They need their foreign reserves. They need to still do it. These things don't happen overnight. This is a gradual process. For me, I've seen the cracks in the foundation, but I've been saying I think the real financial recessions are probably going to occur about middle of this decade. I've been saying that since maybe about 2019. And the reason, and I haven't really come off of that too much because I think when you look at everything that's happening, like for example, this is something we talked about, Ian, and I'm going to put this up on screen. We're not going to go over the chart first. We'll get to that just in a moment, but I wanted to talk about FedNow. So FedNow is essentially the system that the Federal Reserve is rolling out for payments, and there's a couple of pieces of it. And it's a new system. And it seems like to me, it runs on blockchain because when I look at the fee schedule, it looks like a blockchain you would see, or I'm sorry, a charge schedule you would see on a blockchain related product in terms of the cost and transaction volume and that kind of thing. So I think the Fed is implementing blockchain, but it's interesting. They don't want to talk about it, about what that is. Well, they've delayed part of it. So I apologize. I'm getting some noise outside from a truck. So if that comes through, but they're not implementing, you know, all of what's going on. They're only implementing the internal payment system, the FedNow, but the Fed wire, or that part which is going to eventually replace SWIFT, which is based on the engineering standard ISO, I think it's 20022. Not everybody's in compliance right now with ISO 20222. And so they don't have all pieces of this system in place. They believe that as of July this year, they're going to be able to do the internal payments piece. So if you have a credit union, somebody else has a bank, previously that was an issue because you would have to wire or take money out, give them a banker's check or cashier's check and put it in. And Zelle didn't work because a lot of the credit unions aren't on Zelle. And so you had to use third-party payment processors. I believe that the government wants to take over that. And so I believe that what the original piece of FedNow is for is transmitting money internally via an app. But they don't have the whole system ready yet. So they can't just cut over to a full-time central bank digital currency. There are things that they need to implement which aren't in place. But I think the rhetoric has started on the problems of the dollar because you've seen it on PBS, you've seen it on Fox and CNN. The mainstream media is now starting to talk about it. So to me, we're in this transition period where we're moving away from whatever the current system is into the new system. But something that I pointed out is this takes a while. It can take anywhere from a few years to a generation. It really takes a generation to educate people on a different system. But I think that you also, that's my view, but I think you also had a different angle on this with regards to, you know, who owns the Federal Reserve and currency and stuff like that. Maybe you want to talk about that a little bit.
Yeah, so to increase control in the banking system and therefore to add power control to the people who own the banking system, and therefore that adds power and control I'm convinced those very people pretty well control government, or whatever color it is. You want to concentrate the number of transactions, so you're aware of more transactions, so you can decide who gets the loan, who gets what rate, who doesn't get the loan. So if we look at what's just happened with the banks, the bank issues, First Republic, very great deal for JP Morgan. I think they made a $2 billion profit instantaneously on that deal. But not only that, the downside is fully underwritten. But the more banks JP Morgan are taking over, they are accumulating shares in the Federal Reserve, because the Federal Reserve is owned by shareholders. It's in their documents that to be on the federal or the regional Federal Reserves, you have to have shares. So these are not transparent, they're not publicly traded. But as each bank goes down and JP Morgan sucks them up, they are increasing their ownership of the Federal Reserve. They're increasing their understanding of who's doing what in America. The US law has been broken, the banking law. No bank is supposed to have more than 10% of deposits. I think JP Morgan now has 13%. That could rise this weekend with a takeover of another bank, and next month with a takeover of another bank. So they're increasing knowledge of transactions. Therefore, they're basically, if you could see someone's or some businesses, all of their transactions, you'd have a good idea of who they are and what they're doing and where they're doing it. And you'd have some.
And the banks definitely have that, don't they, Ian?
Yeah. So if you look at the Russian system after the Russian Revolution, right the way through, I think it was to 89 or 90, there was one bank in Russia. So they knew everything. And obviously a lot of that to start with was on handwritten ledgers. So it didn't have to be computer entered. It didn't have to be run by blockchain to have control. So the more data you've got and the more people are using your system, the more control you've got. And I think for one bank to have 13% and looks like they're going to be growing, because realistically, if you're a business, and you've regularly got over $250,000 in an account, even if it's moving in and out all the time, are you going to stay with a regional bank? Are you going to stay with a credit union? Or are you going to...
Ian, sorry to interrupt you. That's something I wanted to talk about. We also talked this morning about consolidation of regional banks. Yeah. I've noticed when I'm now I use credit unions almost exclusively just because I want to support them. And, I want to give my money to local people that it can be lent out for mortgages and things like that. But it comes with a certain amount of risk, because credit unions and the regional banks have a higher loan to value ratio than the big guys who have more commercial products under their belt. So there's more risk in that banking. And it seems as though, when I was hooking up a third-party payment service to my bank, they would not approve it. And I wired the third-party service and they refunded me the money right back. So we proved it worked, but they would not approve the account. And I think it was a risk management decision about getting involved. And so it does seem like some of the control and some of the is all being, pushed to the large commercial banks.
Yeah. So we are heading to more and more control for sure. And it's definitely seems very cartel-like, doesn't it? I mean, you look just after JP Morgan took the fine, prosecuted under the RICO Act for spoofing the market on tens of thousands of occasions, specifically precious metals. I think just a few days after that court judgment, they withdrew from participating in the overnight repo scheme. And that's when we had that September, I think it was 19th, it was September 2019, when we spiked to 10%, the overnight repo rate. That could well have just been JP Morgan flexing their muscles, saying, yeah, you can give us a fine, you can call us a criminal, but we have enough power to collapse the system. And, I think that's highly likely. I mean, they definitely have their own set of rules. You look what happened to Lehman Brothers. Well, everybody thinks Lehman Brothers went bust because they were the worst bank in that 2008 crisis. That all the banks were as bad as each other. Lehman was sacrificed because they pulled the plug, or tried to pull the plug, on the rescue of long-term capital management. They broke ranks. And just tried to extract what they were owed and try to collapse the agreement that had been made by all the other banks that agreed to rescue long-term capital management to stop the system collapsing. That was way, way back. So if one of their gang or whatever your cartel breaks ranks, they get punished severely eventually. So they're going to behave. This is mafia rules. This is worse than the horse's head in the bed in the morning. So there's definitely a level of control in the banking system that is not healthy. Definitely not American for sure. This is what was it? Andrew Jackson fought twice against central banks, and
yes, he did.
Thankfully they had a time limit, so they timed out. I think it's time the Fed timed out. Let's see how we get along without them.
Yeah, I agree with that. And I follow a lot of the digital stuff of, long history and technology, and it's not the most popular content on my channel. I know a lot of people are really following gold and silver, but the reason I cover it, one is I have an interest, and two, a lot of the world runs on this technology. I mean, blockchain is so now integrated into everything. And I think we have to separate out the tool piece of it with the currency part of it. Blockchain is very beneficial. And if we took blockchain away all of a sudden, we would have major issues in our society, because a lot of our food distribution, financial system things are now integrated with blockchain. So blockchain is here to stay, and it's never going away. And I also believe that I don't think that on a widespread scale, we're going to run around with gold and silver coins and silver. I wouldn't mind it personally, but I think the world, and people, when I have this opinion, people put this on me and say, oh, you're not in favor of gold and silver as money. And I am. But when I talk to people that are doing these projects around the world, digital technology is here. It's not going away. And so I don't think widespread, everybody's going to run around changing their gold and silver. Because think about why we had the gold standard. One, yes, it was to facilitate more currency, fiat currency, but it also solved the problem of people not having to carry the gold and silver around, because if you get robbed, I mean, especially today, if we revalue gold today and it was at 10 or 20,000 or whatever insane amount, who wants to walk around with that in their pocket? It makes you a target. Yeah. So I think a lot of the technology could be beneficial, but it's where it's centralized is the problem. And I think that there are some free market alternatives there that may allow us to have more private business, and and this is why, this weekend I was reading a lot of comments on Twitter about people saying we should crash the system right now. Don't kick the can down the road. But I think we're at a precarious position where a lot of people would get hurt if we just said, okay, let's get rid of the dollar. This is a long way of me saying, don't we need to come up with a private market solution before we wish for the dollar to collapse?
Yeah. I mean, I've had the understanding for a long time, at some point you enter that hyperinflationary death spiral that Rafi Farber talks about on the end game. And then you'll get a deflationary death spiral. We could have the deflationary death spiral now and avoid the hyperinflationary one. So we could have something that's absolutely horrifically ugly. So at some point, there has to be an accounting of what is wealth. At some point, there's a reckoning that claims on wealth, need to be realistically realized. Well, actually, what will this buy me in the future? What will this $1 million buy me in 10 years, 20 years time? At some point, there's a reckoning. I don't think there's any chance of a soft change into a new system, but I totally agree with you, Rob. It would be better to if there were some alternative schemes in place, so at least there could be some sort of transition. And like you said, that blockchain has enabled honest bookkeeping for things like the Kinesis platform, Gold Money, Load. I don't know, is Silver Token still going? Have you heard about Silver Token? There's been quite a few precious metals ones.
Yeah, RS is another, and I know that there are a bunch of smaller projects also bonding metals to
now. If they succeed in actually having a redemptive setup, so you could prove, I can go take my notional ounces of silver, notional ounces of gold, and go collect them in physical. If you could prove that, I think that would move a long way to people moving to a gold and silver based thing. But like you said, with it's vaulted, but secure, independently audited, all the safety things you need to stop. Historically, what mankind does, the banker sees the gold sitting in his bank and thinks, well, no one ever comes and gets it. Maybe 1 or 2 coins a month, so I might as well loan out the rest. It's like,
right.
That's a problem. But no, I agree. I think we need to keep talking. We need to keep looking. Like, how can it's all very well bashing the system and saying it's got to end, it's got to crash, but that would be catastrophic. That would lead to riots, starvation, horrific things, especially in the dense urban areas where, you know, I mean, at least if you're in a rural area, you know, you can find water, you can find food, you can find fuel. But if you're in a city, it all comes in, doesn't it? It all comes in by truck or plane. You know, it relies on so many transactions to happen before you get what you need in the store, or you get the gas in the gas station. There isn't a way of switching from the current fiat system into a sound money system
without a whole bunch of pain, right? Wouldn't it be a whole bunch of pain?
Yeah.
If we just try to cut it right now and said, let's go, wouldn't it just screw a lot of things up?
Yeah, and to a certain extent, every time one of my clients takes 100,000 or 200,000 or $1 million and turns it into gold and silver, they're pushing the system closer to the edge. I mean, yeah, okay. But you have to look after your own situation. You've got to, you know, if you come to the realization that if you want to store your wealth, you do need to store it in something other than a fiat currency, at some point it will accelerate that tipping point. But yeah, it's a delicate dance on a sheet of thin ice, isn't it? For sure, how we move from the system. Yeah, I mean, we can look at all the other countries where it's happened, and it hasn't gone well, has it, for the poorest of the society? They never fare well, and they always get taken advantage of. They always lose what property they have got. You know,
the commodity producing nations. You know, without having this go on to a commodity discussion, I don't want to go there, but the commodity producing nations often take it on the chin. And that's one of the reasons why things like gold, silver, copper, tin go through these very cyclical, you know, 10 to 15 year sort of cycles. Is we ignore commodities. We don't invest in them. And then the commodity producing nations stay poor, and it benefits, you know, the nation which has that currency. And that's always been the case, I think, throughout history. And that's when we talk about mercantilism, the currency helps protect the trading, which helps protect, you know, and it builds a two-tier system. And I think we've enjoyed that in America for a very long time. And one thing, Ian, that you were pointing out before, and we're going to go ahead and share this, is we're looking at a chart of M2 from, I believe it's from St. Louis database of Fed. And we drew out a couple. So this blue line is the M2. And you can see when we got to the pandemic, it just went nearly vertical there for a while. But there's been this steady money creation dating back to like 1970s when we got off the gold standard. And we've seen the, you know, recessions have sort of gotten bigger, and the money printing has definitely gotten bigger. But you know, we graphed out a couple lines. Explain these lines here and what this means, because you're basically saying the dollar doesn't necessarily have to collapse. You can tighten enough to where you can draw some money out of the system. And do you think that we could do that? Do you think we can tighten more without the system itself crashing? And you think so?
Absolutely. And I've said this a few times, and I've heard it. I've heard one other person speak about it. Quantitative tightening has to happen to stabilize the dollar. We've got to get back to that top line, ideally down to that orange line. If we get back down to there, they can carry on the game for a fair while. Maybe another 5-10 years, because it's a rate of change that causes the system to collapse. Otherwise, people adapt. You know, if it's 3, 4, 5% currency debasement, you learn to live with it, and hopefully you learn to store a good part of your wealth in something that doesn't lose its purchasing power at that rate, but it still functions as a day-to-day currency. If you get your paycheck on a Friday and you spend it on the weekend, you're not really worried, as long as your paycheck is big enough to pay your rent, pay your mortgage, buy your food. So if they can fill that gap and get that back down. Now, I don't think realistically the Federal Reserve can do it without one appearing to do such a U-turn. They will lose what credibility they have. But I think they could bring in a system where there's a new dollar and an old dollar. So say we have a crisis this Friday and it gets so bad the banks stop trusting each other. So the banks stop transacting. The banks don't play the game on the overnight repo. So everything freezes. You know, I think it was James Rickards, and they called it Ice 9. I think he wrote a book when the whole system freezes.
Yeah.
So say we
That,
get
that point at which you basically get into stuff hits the fan, essentially.
Yeah, yes. So no transactions work. The credit cards don't work. Your debit card doesn't work. No store can sell you any goods. Nothing can happen. Well, that would be big enough panic, big enough crisis for people to accept whatever draconian rules come in. So say that happens on a Friday and it's going on all weekend. All the Federal Reserve people get called in. They have a special meeting. Maybe they all go to Jamie Dimon's private residence and have a chin wag, and they work out a solution, and they won't be working out there and then. This is already pre-scripted, and the solution is, okay, we have new dollars. Everybody's account transfers, so much transfers through, and that will stabilize the situation. We can turn everything back on Tuesday or Wednesday. Life goes back to normal. Well, for most Americans, nothing changes. But if you've got 1 million or 2 million or 5 million, what if they say, well, only 100,000 goes through on day one? You know, and let's just call it new dollars, old dollars. Doesn't have to be digital. It could even be an existing system.
So this would be much like them revaluing the Indian currency like they did recently, or way back in the day they did.
Well, yeah, I mean, that was physical. They withdrew all of the large denomination banknotes. They've just done that in Nigeria. But you could do it. You could do it on accounts. There could be account limits on how much you can move. So say you've got a money market fund and you've got 4 million in it. Well, now you're told you can only withdraw 100,000 a month. Well, that's quantitative tightening. That the rest of your funds that still exist, they're still maybe gaining interest, but you can't spend them. You can't move them into the new system. That way, they could easily burn off $2, $3, $4 trillion. I mean, I think there's up over 5 trillion now in the money markets. Goodness knows how much has moved into the bigger banks from all the regional banks.
I think that last week it was $30 billion was moved out, according to the Fed, additional to what had been moved out before. So I think we're somewhere approaching, you know, those high digits to where we're getting close to $1 trillion, but we're not there yet. But we're probably, I think right after the bank failures is 550 billion. So we're probably, I don't know, 700-800 billion. I haven't looked at it, but it's a lot of money it's been taken out.
And so if they do this, we have a new dollar and an old dollar. It doesn't have to be CBDC. I mean, I think the Fed probably is ready. I mean, I know you just saw something, Rob, that said they're going to delay launching it. I mean, if you're going to do something as dastardly, you really want to capture as most people unawares as possible. So you've got enough bag holders, because if you can spread the pain a bit more, there's less like. It makes it easier. You haven't got to haircut that many people, that many businesses, for it to actually work, to take a few trillion off the M2 supply. It'll still exist, but take it out of circulation. That would stabilize the situation. Yeah,
so according to payments.com, the Fed is going to do FedNow, which is the internal payments. So if you know somebody in the United States banking or credit union system, this is going to merge the ability of banks and credit unions or people to pay each other using apps from your institution. So for example, I have a credit union here in Texas. I would go to that app. I would be able to transfer money, and it would take the place of Zelle or Venmo because it's bank account to bank account. So you would assume, I mean, you don't have to say anything additional up. So it's very convenient to do it. You can do it from your account. You can pay anybody that has an account in the system, you know, from a member bank. So this is actually FedNow. It could actually be seen as an improvement over like all the hodgepodge of private payment systems. And so I think a lot of people will adopt that. And I think they rolled that out first because that's what they want. They want everybody adopting the currency of their individual nation and doing it that way. So they want the Americans, you know, to adopt FedNow. They want the Chinese to adopt their system. But the connectors between, which is FedWire, which would replace, that's ISO, I think 20022 standard, which everybody's putting into place. China and Russia are doing this too. They're coding their apps to do this over blockchain, which is how you would do international payments. And that's the part that the Fed has delayed because they're not ready for it. And so again, that goes down with a time frame of maybe a couple more years at least, because the systems just aren't quite ready. They're testing them. And then you have towards the end of the year, you have Project Enbridge. Somebody in here talked about another project. another project they want to look at. It's in the chat. You guys look at that. But there are several projects being worked on, and they're not quite there. So I do think that they're trying to save the Titanic from falling apart right now because they don't have an alternative. And if you go to hyperinflation right now, it's a problem, because how would American business run if the dollar dies and they don't have an alternative? Yeah, they can't have emergency currency, like you said, but wouldn't that be sort of a stopgap? Would it be a couple of year stopgap or something along those lines?
Yeah, I mean, the American population is the host, and the banks and the government that are the parasite that lives off the host. So why would they kill the host? If you can keep it alive, or keep enough of the host alive and healthy, that's what you'd do if you're a thinking parasite. I guess that's a new description, I guess, for the bank. thinking parasites. So, and if there's any honest bankers watching, maybe, I mean, don't take it too harshly, but history shows us what central banks do to a nation, especially when they're privately owned. It never ends well. It's always about extracting wealth. I mean, no doubt when they create the new dollars, they get the Cantillon effect, don't they? The Richard Cantillon effect. They get to use them first before they're devalued. They turn them into. They're always front running the downside of their decisions for the American people. They're always front running, position themselves. I mean, this is why our politicians are so incredibly wealthy, most of them. It's not from their salaries. This is why Jamie Dimon he's a multi-billionaire. He knows what's coming, so he can always make the right trade.
That's true, and I think what you described, all money is good until it's spent. So when that currency is first created in our current system, the large commercial banks and the market makers that get that money, it's spent at its current value, but it's not until it's spent. And then that money is compared with the goods in the society, because once it's spent, it enters that equation. It doesn't enter the math equation until it's spent. Once it's spent, it enters the equation. And so those banks get to spend, let's say the dollar at one point in time had lost only half of its value, where they were spending dollars that lost half of its value. But as soon as they spent it, it might have lost 1 or 2 more %, right? And so they're always front running that inflation devaluation. And because they're getting that money essentially for free in the system, or very, very cheaply, it doesn't really cost them anything to do it. And that's how, the big banks can survive when the currencies are failing, is because they get freshly printed currency. And like you said, they know what's going to happen, so they know how to position.
So I think we can safely say that the dollar's not ready to die. It's not going to be allowed to die. That doesn't mean you want to stuff them under your mattress in any quantity, for sure. Right. It doesn't mean you want to leave them sitting idle. But for trading purposes, it's the best currency in the world, and it might always be the best fiat currency in the world until all fiat currencies die. I don't know. It's like, and we do get the exorbitant privilege of earning in dollars. So we do. I mean, you and I mean, we personally front run the collapse of the dollar by buying real things.
It helps us buy precious metals and store our value, as one of our readers commented. I enjoy buying silver to store my economic energy, Robert, and I'll put that back up on the screen. That's very true. That's what we were just talking about, Ian. We're storing our labor, we're storing our energy. We have a lifespan of hopefully 80 plus years, and so much energy, in the world during that time. And gold and silver help us store that over time, so we can exercise that later on when we want it, right?
And particularly, I mean, energy, even on a physical basis, you look at how much rock you have to move to mine silver, to mine it, process it, refine it. I
have one. I'm going to step away and grab one. This is one I got from, it was either Vizsla or Guanajuato on a recent trip. And sorry, guys, I had to run over to my shelf, but this is let's see if I can get it on camera. This is just a rock I picked. I think it was Vizsla. And their project, if I remember, is outside Mazatlan. We went to either coast. I might have getting these backwards. But if you look real closely, you can see the silver in there. I just chipped it right off a hanging wall, and that hanging wall had silver just sitting right in the rock. Let me see if I can find some. It gets, here we go on this side, a little bit more shiny. But the reason this is mostly rock and less silver, let me get out of focus, is there's a little shiny there at the bottom, if you see it. Yeah. Little bits of shiny. That's how much is in, this is considered, Vizsla is considered a high grade silver project. And how much silver do you actually see in there? And how much silver does it take to get from that, or how much of that rock does it take to get to a 10-ounce bar? Well, that's a crap ton of rock that you got to move.
Yeah.
And that's where gold and silver get their value. I've been to enough mining sites to know how hard it is to get that stuff out of the ground. There's no way gold and silver is ever, it cannot be hyperinflated, at least not in the way that a fiat currency can.
No, and the amount of energy to do it actually never ends now. With all the ESG rules, the mine, even when it's mined out, they still have to collect and filter and treat the water. The costs are now perpetual.
Yes,
so
they are. They have to maintain.
To get a permit and to run a mine, you have to prove out that you're going to maintain the site forever.
Mm-hmm.
Well, it doesn't forever equal infinity, so therefore there's an infinite cost to mining now. But no, definitely it is a store of energy, and they're going to mess around with oil prices. When I refer back to my clarification of the people that seem to pull the strings that control what happens in the world, they're going to mess around with oil prices. But eventually we'll see $200-300 oil, and we'll see 50 cents a unit for electricity, and we'll be rational on how far we can drive, how far we can fly. That will come. So mining is just going to get more and more expensive. So
you're going to see all the prices for all the commodities just go, and that's the commodity boom. But the flip side of that boom, Ian, is everything that we now use gets more expensive, right?
Yeah. So that's when you convert that store of energy back into real things. When you need to eat or fix your roof or whatever you need to do, that's when you start spending. Yeah.
So let's talk about the precious metals. People are starting to talk about it. One person says picked up some Morgans for 32. You can see on the screen. Another person's like, I wish I hadn't bought silver because he bought it at 26 and it went down. What's your message to people buying in the precious metals? Should they worry so much about short-term price movements, or what should they be really paying attention to when they're getting into this?
I personally bought 7,000 ounces at $26 a long time ago. Yeah, that would have been lovely if I'd waited and bought it at 18. Yeah, absolutely. But it is a long-term tangible asset. I expected it to do way much better way earlier. If anybody looks back, if that's still, do you remember that interview you did me at New Orleans 2021?
Yes.
I predicted silver would be $40 at the end of 2021. Well, that was way out, wasn't it? That was. But I'm still happy at the end of the week. I check what I got spare, and if I can buy an ounce personally or I buy 100, whatever it is, I'll buy it. As I run the business, I try to buy low and sell high. I try to maximize the profit, and that way I can keep the premiums down. So far, that's how we've managed to be the best premiums pretty on any product. But regret, if you blew everything, yeah, you could say, yeah, I wish I'd not bought it at 26. But we will see $50. We will see $60. We will see $70. We will see a point, as Mike Maloney said, it'll be unaffordium and unobtainium. And at that point, you'll think, I wish I'd bought more at 26.
Yeah, I agree that I don't regret any purchase I had, because like I said, it's the only thing that I know where it stores my kinetic energy and my labor from the past that I'll never get back. The one thing we never get back is time. Yeah. And so it helps me store the value of labor I've built up over time. And so if it fluctuates, it doesn't bother me that much. The other reason it doesn't bother me in particular that much is I studied the market so much over the years. I know eventually it revalues. This always happens. So once you know that, it's kind of like being Jamie Dimon, but being in the gold industry and getting out ahead and saying, we know the way this is going to go. You just have to be patient and think in longer than 1 to 2 year timeframes, which is often very hard for people. And that's the one thing I just wanted to end it up. A quick comment from you, Ian, on that. What about planning? How long should people be planning ahead, in looking at precious metals? Should it be a weekly thing, a monthly thing, quarterly, yearly, 5 years? How should people be viewing this market?
Well, that's a lot of answers to that question. Fundamentally, what I've read, studied, heard, listened to, we've never had so many uses for silver. Even the US Geological Survey predicted it would be the first element to become extinct. Mm-hmm. We are using it up at an incredible rate, and we're treating it as if it's always going to be there, always going to be available. Well, it's a surface deposit. It's an epithermal, so it's a surface or near surface deposit. The going back to that rock you had from that mine, Rob, the old timers used to look for 1.5 kilos per ton. That would be, they would follow that vein.
That's not 1.5 kilos per ton for sure. This is more like, you know, a couple hundred grams per ton.
Yeah. So 2-3 ounces per ton, 2 or 3 troy ounces per ton. So it's getting harder to find. The whole mining process is getting harder. The uses are increasing. The demand is increasing. The supply is not increasing. So it will reset. It's if you want to get rich quick on it, probably not a good idea. I mean, I've had one client who sold a lot of real estate and bought silver at $18. They did really, really well.
Yeah.
But they're still holding their silver. They're waiting. They're waiting, you know, they're waiting till they can buy 3 or 4 or 5 times as much real estate. And if you look at the peak in 1980, it was approximately 1,500 ounces of silver bought the average US house. These cycles repeat. That was, you know, housing was low, silver was high in 1980. So is it going to happen as quick? But maybe it's a blessing it doesn't. It gives us more time to buy more. And yeah, of course I'm going to say that I sell silver, but I hope people realize I'm genuine. I'm doing this because I really want to help people think about the situation. And privacy is not often mentioned either. If you have your money in blockchain, you have it in the bank, you have it in stock shares, whatever, real estate, it's public knowledge, it's government knowledge, it's known, it's recorded, but you buy
that's all going on the blockchain too. Property records are going on the blockchain too, by the way. They had digitized a lot of it, but now it's going to go, a lot of projects at the county level are now moving to blockchain. So all this information is going to go on the blockchain. And when it goes on the blockchain, it's much easier to do searches. So privacy is going to become an issue because you can start to compare all of this information on the blockchain and find out a lot more about people. I suspect this will generate like a third-party industry. People will provide you a service for $20 that you can go research people. But the fact that this is all going to be on the blockchain is going to make it much more accessible. You don't, right now you have to go to your in Texas, you go to your tax appraiser's office to get general property information. You go to the county clerk to get the filings on real estate. But Texas is a non-disclosure state, so at least your purchasing price and things like that are not. But a lot of data is, and when you have all that data and you stick it on the blockchain, that's one of maybe the negative things. It's going to be easier for identity theft and things. And so we're going to have. So blockchain's not all good. I mean, it's good, but we need to put some protections in place from a privacy perspective for people as we get further into the technology era. I wanted to go ahead and end up here, Ian, because we've been going here quite a bit with precious metals. What are you seeing in silver and gold? Are you seeing a lot of sales, and what deals do you have for people this week if they're interested in getting it? Because I know that you run ARKSGO.
Yeah, lots of first-time buyers from a whole range of people. Yeah, whether they're bankers, farmers, mechanics, truck drivers, all walks of life. I've not had any clients say, "Oh, I wish I'd not bought." I wish I'd wait. Because we can't read what the chart's going to say tomorrow or next month, but we do know it's going to get reset. So we're really busy. We're growing fast still. We're getting ready for our grand opening on the 10th of June. So everybody is welcome to come. If anybody can make it to Jackson Hole on the 10th of June. We've got great offers on monster boxes. We're doing sovereigns. We're doing Britannias, Philharmonics, $3.50 premium. So that's a lower premium than a lot of companies are selling 10-ounce bars for. So that's a government coins. We've got 10-ounce bars starting $2.60. We've always got a deal. If you want to haggle, call me up, and we will make a deal.
So let's put up on screen, if people from Gold Silver Pros want to get the deals that you talked about, you just go to goldsilverpros.com. And just go down the middle of the screen and click on Access Deals, and you'll get the form. And that's the way that you can reach out to Ian if you like those deals that he shared. That helps us, the channel, by the way, but also, it's good business for Ian. And I think, Ian, you're bringing people silver and certainly a lot of times gold a lot cheaper than the big sites. So if you're one of those that's interested in getting the lower premium stuff, that's there. But also, if you're interested in Osmium, if you want to take just 30 seconds, Ian, to describe Osmium and your relation to that as well.
Oh, that was cruel. 30 seconds. Can I
I'll give you longer if you want.
Okay. So raw osmium metal is the rarest non-radioactive element in the known universe, probably formed when two neutron stars collided. Therefore, it's not dispersed in the Earth's crust and core. It's found as a byproduct of mining platinum. So if you mine 10,000 tons of ore to get platinum, you'll get maybe an ounce or half an ounce of osmium raw metal. The osmium raw metal oxidizes rapidly, forms is osmium tetraoxide, which will probably kill you if you breathe it in. So not a good idea to mess around with the raw osmium metal. It will eventually hurt you if you let it oxidize. But when you vapor crystallize it at extreme heat, extreme pressure, there's a company in Switzerland have worked out how to do it and turn it into a beautiful crystalline form. And the crystalline form is more inert than diamond, in my opinion, more beautiful than diamond. And it has a unique code. Each crystal face has more recognition points than your fingerprint. So it's superior to blockchain in that, but it can never be disputed. You know, I mean, the only thing you could do is lose it, I guess. So it's incredibly beautiful, genuinely rare, and it's been used by major Swiss watchmakers. It's been used in jewelry in Europe. It's the Osmium Institute are in 32 countries now. They've just been to Saudi. A lot of the high net wealth family offices there are incredibly interested in it. And we are pleased to announce again that we are the first US retailer of vapor crystallized osmium. It ticks a lot of boxes.
Super rare, has better fundamentals than diamonds in terms of economically, looks better, and really is going to store value. And it has a security attribute where no piece is the same. It's like a fingerprint. So, you know, unlike a lot of things, you can't remelt it down and take it from somebody. You know, that piece is always going to be coded to its owner. Yeah.
And it's also the densest element, so it can't be forged by substitution either.
Yeah. Osmium to me is like a natural version of the blockchain. It's immutable. It's almost indestructible, and it's very hard to counterfeit. So if people are looking for all right, well, I think that's going to do it for today. And we wanted to have this live stream because, you know, I've been talking about this a lot with people. We are going through a transition. So we're going to talk about technology in this channel. And I know we have the crowd of you don't own it, you don't own it, you don't hold it. And to some extent, I agree with that. But in today's world, you can't function that way. If everybody puts their gold into a safe, gold effectively has been locked away and cannot be money again. So for everybody just putting their gold under their mattress, if you want it to be money, you got to circulate it. You got to use it. It's got to be out there. And we need to develop ways to do that. And I think technology can play into that. Also using gold and silver in your local communities can be another way. And, you know, we need to develop private systems, you know, to take over our money. We certainly have that right. I mean, the Constitution says only gold and silver are to be used as legal tender. And I'm about to write a piece on that, by the way, a written piece on that. The history is very clear. Gold and silver are money and nothing else. Yeah. And so that's what we need to focus on. I think, thank you, Ian, for doing a large part of that with ARKSGO. First ARK Silver, now ARKSGO, as you've expanded out your business. And appreciate you providing the deals to the market, but also just your viewpoint on what's going on. I think it's a very realistic viewpoint. I know there's been a lot of doom and gloom on social media lately. Certainly more people have come into this space, and a lot of people are saying it's going to end tomorrow. Personally, I don't think that's responsible journalism, and I don't think it's necessarily factual. So we want to kind of be that channel to talk about that and say, hey, there's going to be a transition period here. And, you know, you've got time, but don't wait forever. But more realistically, that's time for us to develop our own solutions. So let's not be defeatist and just go straight to the trash can or the dumpster. Let's see what we can do in the meantime.
For sure. Yeah.
All right. Thank you so much, Ian, for joining us. Thank you, everybody, for joining us. This is going to wrap it up. Appreciate all the questions that we had in the chat. Certainly put a bunch of those up on screen, and appreciate you guys stopping by on a Tuesday. We'll have our regular content the rest of the week. Thursday, we'll have our research piece. Friday's a weekly market wrap up. That's where I go over gold and silver charts, the flows on the exchanges, and the economic data of the week. And I give you two of the biggest stories of the week. That's every Friday in the weekly market wrap. And Ian is going to come back and have his Letters to America series as well. We started that on Twitter, and we'll add it to YouTube here really soon. Thank you, everybody, for joining. Until next time, this is Rob Keens and with Gold Silver Pros and Ian Everard of ARKSGO.